Stocks, bonds, ETFs, straight out of downtown Chicago. This is Zacks Market Edge.
Welcome to Zacks Market Edge, the podcast about investing in your life. I'm your host, Tracy Reinick, and this week I'm joined by someone. I have a guest, yay, by Nina Mishra, our Director of ETF Research here at Zacks, to talk about ETFs, but specifically what's going on with Nvidia in the ETFs. Can I buy Nvidia through an ETF? Of course I can. You can do it through just buying the S&P 500, for goodness sakes. But what if we wanted something a little more spicy, a little more attractive than just the S&P 500? What are my other ETF options for getting Nvidia and maybe some of these other hot AI names in there? So I brought Nina on to talk about it. And we're also going to cover another kind of intriguing topic about the rebalancing that's been going on in some of these ETFs, as some of these tech names have just gotten too dominant in these ETFs and they've had to rebalance them. I'm going to leave it up to Nina to discuss and explain to us all what this means and what they're actually doing, because I think a lot of people aren't really even aware of what's going on with this kind of rebalancing thing that's going on. So welcome, Nina.
Hi, Tracy. Thanks for having me on.
Thanks for coming on. So I was originally going to do a whole show on the most popular ETFs of 2024. Then I didn't really think about what they would be until Nina sent me the list about what they are. And of course, they are the S&P 500. Like, that's where all of us who are planning for retirement, we're sticking a lot of our money into the indexes, right? So the money is just automatically going to kind of flow to those types of ETFs. But then we decided to change course and find out what kind of money was flowing to ETFs that are a little more specific and that hold Nvidia. Are those red hot right now? I would think they would be, because we know everybody's buying Nvidia stock as it is. So I would think the ETFs might be too. So Nina sent me a list of those, and there were some intriguing names on there. So what is it like right now, Nina? Are you seeing like big inflows into these kind of niche ETFs that carry Nvidia?
Yes, Tracy. So if we look at the top 10 asset gainers, on the top of the list, you will see those usual suspects: cheap, low cost, plain vanilla ETF that provide exposure to the S&P 500 index, VOO, and IVV, and SPLG that we talked about on your show earlier, which is the cheapest S&P 500 ETF, that also appeared in the top 10 list. Overall, it was a great first half for ETF inflows. In fact, if we remain on this trend, if this trend continues, then this could be the second best year for ETF inflows ever. And if the stock market does well and flows accelerate in the second quarter, this could be the best year ever. Now, going back to your point about Nvidia-focused ETFs, yes, Nvidia-focused ETFs saw a lot of interest from investors, and Bloomberg, according to Bloomberg intelligence data, Nvidia-focused ETFs took in $4.4 billion year to date this year. And the single Nvidia ETFs, they were very popular with investors. So if you love Nvidia, you will love 2x Nvidia even more, right? So the Granite shares Nvidia 2x ETF, and ticker symbol is NVDL, that saw huge inflows. And in fact, this particular ETF was just about $200 million at the start of the year, and now it is close to $5 billion. So let me share my screen and show you this ETF. So this is Granite Shares NVIDIA 2X ETF and VTL.
So what does that mean when you're talking about the 2 times long? What does that actually entail if I buy this?
Yes. So what this ETF aims to do, it aims to provide two times 200% daily percentage change in Nvidia stock. And this daily rebalancing is important, the daily percentage change. So when the market is trending, it is just moving in one direction, then your overall return could be even better than 2x. So in fact, Nvidia is up about 165% this year, and this particular ETF, NVDL, is up about 400%. It's just because the stock was just going up in one direction. And in fact, there is one 3x NVIDIA ETF because I understand we have some listeners, some viewers from Europe too. So this ETF trades in Europe. This is an exchange traded product. And this provides 3x daily return. So that is why this ETF, if you look at the performance, let me see where the performance for this ETF is. So this is actually up more than 1,000% this year. Where do I see the performance? Let me see.
So if it can go up 3 times, it can also go down 3 times, right?
Yes, it will go down 3 times, and it will go down even more than 3 times if the market is very volatile. So generally, we do not recommend that investors should hold these ETFs for a long time. These should be used only as trading tools. And you will see that these are also expensive. So if you buy an S&P 500 ETF, the cheapest one you can get is for just 2 basis points. This ETF charges 1.15%. So yes, it is generally meant for short-term trading bets only. And particularly when the market is volatile, you should not hold this ETF for a long time. We also saw some decent inflows into chip ETFs because there were other chip stocks also which did really well. For example, Broadcom, Taiwan Semi, those stocks did quite well this year. Though those performance though were not anywhere near Nvidia's performance, but some investors felt that AI boat could lift many boats, so that is why we saw decent inflows into chip ETFs, decent inflows into AI ETFs, and QQQ, which is basically a tech-heavy mega cap. The Max 7 stocks, they account for almost half of the portfolio in the QQQ. So QQQ also was among the top 10 asset gainers, and QQQM, its cheaper version, which we have discussed on this show earlier. So if you're a longer term investor, you buy QQQM, charges 15 basis points. If you want to trade, you look at QQQ. So both QQQ and QQQM, they gathered a lot of inflows. What was surprising is TQQQ, which is the triple leveraged QQQ ETF, that saw outflows this year. And the reasons are not surprising. This year, Max 7 was not a monolith. In fact, traders had started talking about the Fabulous Four or the Fabulous Five or just the Magnificent One. Remember, Tesla was actually down earlier this year. Tesla has just started outperforming over the past 10 days or so after the company reported its Q2 deliveries, but were not as bad as feared. So that is why investors, traders were not looking at TQQQ. TQQQ was up about 80%. So they said, why TQQQ? Let's take a look at NVDL, which is up 400%. So talking about going back to the Max 7 rally, so the Financial Times reported that in the second quarter, just 3 stocks, Nvidia, Microsoft, and Apple, had accounted for 90% of the rally. So that is why investors were looking specifically at Nvidia-focused ETFs, though in general, those large cap and plain vanilla ETFs also took a lot of money. And in fact, if you own just the S&P 500 ETF, the Max 7 account for almost 35% of the portfolio now, right? So you're getting a lot of exposure to Nvidia and other Max 6 stocks in your S&P 500 ETF as well.
Yeah, they do overweight in a lot of those bigger indexes as well. What is the weighting on the QQQMs for someone who's not familiar with that? Is it equal weight, or it's cap weighted, isn't it, on that one too?
Yes, so let me share my screen. So you can go to the code page of QQQM, and we have a link which you can use. We have holdings on our website too, but if you want to look at the latest daily holdings, like today's holdings, then you can go use the link on our website and go to Invesco webpage for this ETF. So this is a cap weighted ETF. This is exactly like QQQ. You'll get the same exposure. It's just that it is cheaper. So this was launched about 2-3 years back by Invesco and has already gathered about more than 30 billion in assets, and so it's a good way of owning all these stocks in one ETF, and it charges 15 basis points in expense ratio. So if you look at the top holdings, you will see that all the Max 7, they account for almost half of the portfolio.
Wow, I knew it was a lot. I didn't realize it was that much. Okay. Well, yeah. I mean, people want a concentrated exposure, right? Like, at least
Yeah.
they seem to right now. So you're definitely
Yeah.
getting it. Even with something like the QQQs, you are still getting pretty concentrated in those big cap
Right.
names.
So everyone has been talking about that broadening of the rally. We should see some broadening of the rally. So we did see some broadening of the rally over the past week because Nvidia had taken a breather and other mega cap tech stocks started outperforming. So Tesla and Amazon, Apple, those stocks did quite well. So maybe for the second quarter now, investors believe that maybe just bet on QQQ and other tech heavy ETFs, because you never know whether Tesla will outperform now or Nvidia or Apple.
Yeah. What about that ETF we've talked about in the past that's just the Magnificent Seven? Wasn't that launched like last year? And we've chatted about that because the ETF industry loves to dive in on the hottest things. There was the FANG ETFs or the FANG Men or whatever those were back in the day. There's the cannabis ones, things like that. And then they launched this Mag 7 one. You would think this is where everybody would want to be. Is the money flowing into this one this year?
Yes, so let me show my screen. I'll share my screen. So this is by Roundhill. The ticker symbol is MAX. And in fact, Roundhill had launched this ETF as a big tech ETF, just 5 stocks, and then they expanded to include the 2 more. Tesla was earlier not a part of the portfolio. So this was launched last year. I think it was launched in April of 2023. Now, if you look at the holdings, this equal weights its holdings, and this uses derivatives. And when we will talk about those rebalancing a little bit later, then I will explain why this ETF is not bound by those capping rules. So currently, Tesla is the top holdings. That is because over the past 10 days or so, Tesla has done very well. And so this must have rebalanced at the end of June. And after that, Tesla has done well. So Tesla is the top holding. And you see the other Max 6 stocks. Then at the time of quarterly rebalancing, all these weights will be made equal. So this ETF currently has a 632 million in assets, and this had started, I believe it has almost more than tripled in size this year. So a lot of inflows into this ETF as well. If you just want a concentrated, equal weighted exposure to the Max 7 stocks, then this is worth a look. It's up about 60% year to date.
Okay, so I have it up about 95% since April of 2023, and the S&P is up just 34 during that period of time, even though this is equal weighted. Now, when do they rebalance? Is it quarterly then?
Yeah, this I understand is rebalanced quarterly. So at the time of rebalancing, all these holdings will be brought to equal weights.
Okay. So still pretty impressive given, what some of the individual holdings have done, and then they're rebalancing it. So still up 95% since April 2023. What about the rebalancing? I guess this is a good time to talk about that. This is just normal rebalancing that they have to do because they have the equal weight requirement. So then they have to rebalance every quarter. But what about the other news I'm hearing about how some of these other ETFs had to rebalance because some of the positions just got too large within the ETF? That's how I understood it. And I didn't even know there was this rule that if one position gets too big, they have to sell it. They have to get smaller or something. Like, how does that work? What's the rule?
Yes, so this rebalancing got a lot of attention. ETFs rebalance regularly. Some rebalance every quarter, some rebalance annually. But this got a lot of headlines, mainly because Tesla's weight went up from about 6% to 21%. And because of that change, that was a 15% change in this. The ETF was about $72 billion. And that 15% change in that huge ETF meant that State Street had to buy about 10 billion worth of Nvidia shares at the time of rebalancing. So that is why it got a lot of news. Now let me share my screen and show you the rules. So this is a note by State Street, and this very nicely explains the rules, the capping rules. So most ETFs, they are the structure is this regulated investment company. So they're structured as RICs with the SEC, and not all, but most. And all the RICs, they are required to follow some diversification rules. And these are the main diversification rules. No issuer can be more than 25% of the fund's assets, and then positions exceeding 5% cannot in aggregate exceed 50% of funds' total assets. Now, State Street's index provider, they use a little more buffer to meet with these requirements so that they do not have to, frequently rebalance. So apart from these rules, they apply some more buffer. So they follow this rule at the time of rebalancing, 23% security cap and 4.5% security cap to meet the 50% rule. Now let's take a look at XLK. So if you look at the holdings after rebalancing, these two holdings have been brought. Nvidia was brought up and Apple was brought down. So this is very unique now because Nvidia has done so well. So in this particular sector, in information technologies, GIG sector, they are three holdings which are so huge, and so that is why they had to cut Apple's size, and they had to increase Nvidia size, because remember, Nvidia had surged, and at one point it had become the largest company in the world, and even overtaking Microsoft. And these are so close to each other now in market capitalization. We do not know whether at the time of next rebalancing, whether Apple will be number two and Nvidia will be brought down to about 5% weight, or Microsoft or Apple again will remain 5% weight. And let me show another ETF, which is the most popular. This is by Vanguard, VGT. This is, as I mentioned, this is the most popular technology ETF now. Now, this also follows those RIC diversification rules, but maybe because this rebalanced at a different time on a different date, and also remember they have some additional buffers too. So this has three companies which are very close to each other. So this is a better representation of these current market capitalization of these three giants. So Microsoft at the top, and then Apple and Nvidia. And you will see that no two holdings with more than 50%. It does meet the second rule also. This one, positions exceeding.
Just a quick question. So in the first example, in the XLK, we now have two holdings that are over 40% in there. But that's because they did have to bring down Apple so that there wasn't anything over 50%, right? Is that why they did it? Okay. So if Nvidia or Microsoft continues with their gains here and growing, and if those two get close again to 50%, they're going to have to bring one down again.
Right. So again, remember these rules that 5% positions exceeding 5%, total cannot be more than 50%. So yes, if those two exceed 50%, they will have to rebalance.
Okay. And then not a single one. So Microsoft's at 22% in the XLK. And if that were to go to 26, it would have to be rebalanced
brought
as
down.
well.
Yes.
Okay.
Yeah. Mm-hmm.
Okay. But this has like bigger implications, I feel, than just with the tech. I mean, it's definitely showing up in these tech ETFs because of what they're doing, because of Nvidia and Microsoft hitting new highs every day, seemingly. But I heard someone talking about how the XLE, the energy ETF, may have to be rebalanced because its two largest holdings are Chevron and Exxon, and those have become so big and massive. I don't think either one is at the 25%, but they're close. At least one of them is, they're both over 20 in there. So that one might have to be rebalanced. And I don't know why, but I wasn't really thinking like, an energy ETF might have to be rebalanced too, because it's getting such consolidation in those big cap companies that even there they might have to sell some. So that's just something to watch for investors who, are interested in why this is all going on. Oh yeah, there it is.
So let me show my screen. So this is XLE, the energy spider ETF that you mentioned. So Exxon is the top holding. It is about 23%, and Chevron is about 18%, and then EOG Resources is a little less than 5%. So you'll see that these are currently below, each is below 25%, and those with more than 5% weight also, they are not close to 50% currently, because the third one is small. In case of technology sector spider, the third one also got so huge. There are other sector spider ETFs also, other sector funds also, which are quite top heavy. So these I would be watching. The consumer discretionary ETF. So Amazon and Tesla are huge in that ETF. And then you have Home Depot. So you will have to watch whether these three, if the total is getting close to 20 to 50%, or Amazon is exceeding 25%. And then there's the communication services ETF. This also Google, which is currently about 24%, and Meta is also about 24%. So these are also, there are two holdings which are getting close to 25% each, but the third holding is AT&T, which is below 5%.
Yeah, what would they do in a case like this then? Let's say they do need to rebalance it. Do they sell both Meta and Google shares? And then what do they buy? How is that determined?
So they will sell both these Meta and Google shares, and they will, if they exceed 25%, they will be brought down to below 25%, and they will also make sure that if AT&T is also more than 5%, then AT&T, then the total doesn't exceed 5%, and whatever they sell, that will be distributed among other holdings in their market capitalization order.
Okay, so basically these big mega cap $1 trillion companies are messing up the ETFs.
Right, correct. So let me quickly go back to the Magnificent Seven ETF, right? We talked about the holdings there, and you will see that there are so many holdings that which do not, securities each is more than 5%, and so it is breaking the second rule. But this is they found a loophole. These ETFs, they use, and single stock ETFs also, they use derivatives to get these exposures. And in case of derivatives, only the market value of derivatives is taken into account, not the notional value of holdings. So market value of those derivatives is less than that, meets the requirement, that meets the 50% and 5% rules. So that is why we have seen many these specialized ETFs using derivatives to meet those rules and gain these kind of exposures.
Okay, that makes sense. Otherwise, you wouldn't be able to have this kind of ETF. Couldn't operate. Okay. All right. What about the semiconductor ETFs? We haven't really talked about those in terms of owning Nvidia. And do any of those need to be rebalanced at all because of what's happening with Nvidia, or even like Broadcom?
Yeah, let's take a look at some popular semiconductor ETFs. And the most popular one is by VanEck. And there's one by iShares also, which is quite popular. So VanEck Semiconductor ETF, which I'm showing now, SMH, this has a lot of exposure to Nvidia. Let me see, Nvidia is its largest holding. So Nvidia is currently about little less than 20%. And then Taiwan Semi is about 13%. So it is still within those 5% and 50% rule. Another popular semiconductor ETF is by iShares, SOXX. So let's take a look at that whole ETF as well. So SMH is a little bit more top heavy than SOXX. So you will see that in this ETF, NVIDIA's weight, this is not as top heavy, and in fact, NVIDIA is little. Broadcom is at the top. So after rebalancing, Broadcom must have done a little better than Nvidia, so that is why it has.
And Taiwan Semi is a little bit further down.
On
this one.
So this follows some different capping rules. So that is why this is not top heavy, and it is not nearing anywhere near those RIC rules.
I see the Zacks over the last 2 years is up 117%.
Oh, chip ETFs have done
SMH,
so well.
SMH is, well, because of the weighting, most likely.
Yeah, because of NVIDIA's. Yeah.
Yeah, with
So
Nvidia,
SMH
that's
is
even percentage.
yeah, SMH is more concentrated. It holds just 25 companies in their market capitalization weight. SOXX has some modified cap weighting requirements. So this is not as top heavy. So obviously SMH benefited more from Nvidia's surge.
Okay. So I would guess that more money is probably flowing into SMH, right, than the
Yeah,
stock.
this year SMH has gathered a lot of assets. Yes,
We like to
investors
chase
saw.
our performance. You know, if
Yes.
something's doing 162% versus 117%, well, I'm gonna go for the 162.
Yeah, so
But
all
if
these
you are,
ETFs.
yeah, if you are looking just to be an Nvidia, then and you want a little bit of other exposure, then SMH is the one.
Yeah, if you believe that Nvidia has run up too much too soon and other chip companies may do well in the second half of the year, so SMH or SOXX both are worth a look. And one more thing I wanted to mention that while all these ETFs, NVIDIA focused ETFs, chip ETFs, technology ETFs, they gathered a lot of assets this year because of the excellent performance. Some investors they remain skeptical of this rally. So we have seen so much cash going into money market funds and other cash like instruments. And within the ETF world, we have seen a lot of inflows into buffer ETFs and options based income ETFs because maybe investors think that rally has gone too much too soon too far, so maybe it's time to take a break. And so those buffer ETFs kind of protect your downside, but they also cap your upside. So inflows into those kind of ETFs suggests that many investors remain skeptical of this rally. And I think one of the reasons my stocks may continue to do well in the second half of the year, I believe, is because there's so much money on the sidelines. As I mentioned, more than 6 trillion in money market funds. And once the Fed starts cutting rates, or at least indicates that they are ready to cut rates, the attractiveness or the attraction of those money market funds, which are currently yielding about 5%, that will come down a little bit. So maybe we should see, hopefully we will see some inflows out of those cash-like instruments into these stocks and stock ETFs.
Okay, so even more money might be coming in, and that's something we're definitely going to have to watch as we go through the year. Let me recap the stock tickers we talked about. They're ETFs, a lot on this episode. So we know many of you want that 2 times Nvidia because you're in it. But remember, it's not meant to be held for like the long periods of time. But the ticker there is N as in Nancy, V as in Victor, D as in David, L, NVDL. Then we talked about the various other ETFs that hold it. Of course, you can get it in the XLK, which we were just talking about on the rebalancing part. But there is also the popular Vanguard Information Tech Index Fund ETF. Ticker is V as in Victor, G as in George, T as in Tom, VGT. Then there is the Roundhill Magnificent 7 ETF, which is MAGS, M as in Mary, A as in Adam, G as in George, S as in Sam. Then we had the 2 semiconductors, the VanEck Semi ETF, S as in Sam, M as in Mary, H. That was the more niche one that had fewer holdings, that had the biggest holding of being an Nvidia. And then there's the iShares Semiconductor ETF, the always popular Zacks. S is in Sam, O, X, X, S, O, X, X is that one. And that's most of the main ones I think we talked about. But that's a lot of choices. So if you're looking to buy Nvidia, but you don't want to just buy it as an individual holding, and maybe you want some more exposure to these other tech names or other chips, then some of these are ones to check out. And we're going to be covering everything with Nvidia and the ETF world all throughout the year. So be sure to subscribe to get all of the Zacks Market Edge podcasts. You can get us on Apple, we're on Spotify, we're on Amazon Music, and of course, you can find this on YouTube. Get us on the video podcast on YouTube so you can see what Nina was talking about when she's sharing her screen. And be sure to get us there at Zacks.com/YouTube. Or put in Zacks Investment Research just to find our channel and subscribe. Don't even bother looking around for it. Just get all of our videos. You'll get a lot of other stock and ETF videos there as well. But be sure to get us somewhere, and I'll see you again next week on the Market Edge.